10 years ago, I was really broke, living next to a dumpster with 3 other guys. Just because you don't get into crypto or get into this hype cycle does not mean you lost something. When you're trying to be a medium-term trader, then it's gonna affect your life in many ways. Every downwards movement will ruin your day. I've also seen people really feed 3 generations of family.
Hello and welcome back to the Alex Witherell Show. Today I have a very interesting guest. He is a Bitcoin expert and one of the original co-founders of the Berkeley Blockchain Fund. Really interesting guy, Luke Kim. Great to have you here.
Great to be here. Thanks for hosting.
Yeah. So you're. I know you don't like to admit this too much, but you're a Bitcoin guy in Miami.
Yes, and I only ever hide it in Miami.
Yeah, I know. So tell me. So that's kind of funny to me. So we have this Bitcoin culture in Miami, and there's a large crypto thing, but I know a lot of guys kind of try to hide it because I think women are kind of turned off by it. It's or
turned on.
Yeah, maybe
in the wrong way.
Yeah. I get the sense whenever I hear people talk about Bitcoin in Miami, they roll their eyes, are like, oh god, it's another crypto guy. Sounds like kind of a scam, right? But you're like a legit dude. Like you've done like some serious stuff in the blockchain world. You have obviously really kind of established your entire career around Bitcoin. And we're going to dive in today about a lot of different things about Bitcoin and also the culture in Miami. But talk to me first just about what brought you to Miami? What's the culture like here for crypto? And why is this becoming a popular destination for crypto?
Miami is unique because it was one of the original hotbeds of crypto. And since then, Miami has been flooded with a lot of money, oftentimes because people in crypto want to evade taxes or optimize taxes. And Miami is a good haven to do so. So Miami and Puerto Rico ended up becoming hubs. Technology-wise, blockchain technology is pretty much centered in San Francisco and some other places. And that's strong because San Francisco has strong AI as well. But I think in Miami, the culture trends more towards investing and trying to get on the hype. And it's not a bad thing. I believe that you need adoption from investors as well as technologists. But in Miami, the focus is entirely on investment. Now, I would say I've seen friends get burned by meme coins and participate in weird things.
Okay, so when you say meme coins, are you talking about like Dogecoin or something like that?
Like Dogecoin?
Yeah.
Yeah, sure, Dogecoin. So in crypto, we largely separate token economies into a few categories. So up top, there might be the blue chips. So think Ethereum, Bitcoin, and then there might be altcoins, and then there might be meme coins, which are, maybe they're live for just days in any substantive way. And there might be people who own north of 2% of that token supply, who can effectively manipulate the markets. Meme coins could be built out of just imagery. So straight up a funny meme around which there's a whole token economy. So
that makes it inherently a lot more volatile.
Kind of.
Yeah. But it's not really like built on anything real.
On utility? Yeah, exactly. Yeah. For example, there's a coin called Cum Rocket.
Okay.
Which, I mean, dude, think about it.
Cum Rocket, yes. I wonder what that's about.
Yeah, like, do you imagine a team of PhDs hanging around building Cum Rocket?
Yeah, that's kind of funny.
Is this blockchain technology with smart contracts?
Yeah.
No, this is crypto assets that are memes.
Yeah.
So there's that, and then there's also Bitcoin, which is much, very different.
Yeah. So that's interesting. I think a lot of people, when they... I've talked to my parents about this, right? And they're like, oh, it's funny money, And I know I have a very good friend in DC. He's one of the top lobbyists in the crypto industry. And he's explained to me in great detail that there's a big difference between Bitcoin and like Dogecoin or something different like that, one of the smaller altcoins. Talk to us why what is the fundamental difference between these things? Because I would say 98% of the public does not understand this.
Yeah, I would agree. 98%. That's a pretty. I think that's a scientifically accurate number. Well, let's see.
So let's dig into this. Let's explain to a dummy why Bitcoin is fundamentally not going to fall apart.
Well, I don't know if Bitcoin will never fall apart, but what I do know is that Bitcoin has the strongest case being made for crypto assets as a store of value, an investment vehicle, etc., because it's the original and people have faith in it. The same way that any other token, any other currency, even fiat money, people have to have faith for it to be worth something.
Sure.
So with Bitcoin, what you don't get is smart contracts. So this is where a lot of people lose Bitcoin. Is with Bitcoin, you don't get to program apps on it. It's just crypto. It's an asset. But with Ethereum, for example, you can program smart contracts, which are like contracts without law. We say that code is law in Web3. So with Ethereum, you get a lot more utility and functionality, and so on and so forth. Every single token economy is based on a blockchain protocol on which you can build apps. And these protocols may or may not support smart contracts. But the point is, there's blockchain technologies, token economies. Bitcoin is an original asset. It's what people believe in. So therefore, it has power. Kind of like if you're Genghis Khan and you release a currency, then people are going to believe in you because it's a Genghis token.
Yeah.
They're like, oh, wow, you're going to protect your economy.
Right.
But the thing is, Bitcoin, how it is largely valued due to people's faith and activity within the token economy, that can be compared to the ultimate intention of meme coins. Because meme coins basically want to become hype, grow in value, and have a lot of holders, so they transact with it. Meme coins are aspiring to be a Bitcoin, but it's hard for them to be that because oftentimes they miss the mark. It's not substantive. So anyway, I think Bitcoin over the long run has staying power because people know about it, and there's the effect of people's faith pushing forward the value of the token and keeping it somewhat live. But other token economies, they are more volatile, as you say, and probably a little more uncertain.
Right.
Yeah.
So in the last, I think this was in the last like 4 or 5 months, BlackRock has opened an ETF on Bitcoin.
Mm-hmm.
People's portfolios can now have exposure to Bitcoin. Do you see this fundamental change in these major investing institutions putting tons of money into Bitcoin now? I mean, do you see this as this isn't going anywhere? It's going to hold up the price no matter what now.
Man, if I had a crystal ball into the alpha of Bitcoin, man, I would sell that ball,
Yeah.
So who knows if institutional players will guarantee long-term stability for Bitcoin as a security, or as an asset. All I know is that when traditional players get into an industry, especially in fintech, that industry or that vertical tends to become legitimized. So there was a time, for example, when the cannabis industry had trouble banking, but now it's going more and more nationwide. It's easier and safer to do business in that space. So similarly, I think crypto will experience a transition from being a new industry, something novel, to something more consistent. And when we go from novelty to consistency, that means there's mainstream adoption. When that happens, then I can foresee a great spike in price across the board for token economies as tokens become something that you use in daily life rather than just trading on markets. But when will that reality come? I'm not sure.
Yeah. So right now, would you say that, I mean, obviously someone like Michael Saylor of MicroStrategy, he's just dumping cash from his company into Bitcoin. This guy is just amassing a ton of Bitcoin. And I've heard him say before, he says Bitcoin is no different than right now buying like a commercial tower in New York. I mean, like he's like
maybe better.
Yeah, he's like the value of that commercial tower in New York City is not going anywhere if you owned a tower. And he sees it the same way. And as you just said, it might be even better, right? Because at this point, we now have 10 years of historical returns that have frankly been insane. And so for now, I would say, would you say it's a safe store of wealth?
If you can handle volatility and risk, then yeah, it's safe.
Yeah.
But am I a financial advisor? No.
Yeah, of course, yeah. For the record, everyone, this is not financial advice.
But
nobody can sue us.
The fact is, for both of us, we both held Bitcoin. We both had Bitcoin.
Yeah.
Have Bitcoin. And we've seen it spike from 20, 30K to 90K.
Right.
And then now it's higher, but then it might also fall. Right. It wouldn't be surprising if Bitcoin doubles by tomorrow. Right. It also would not be surprising if it,
chopped
halves.
In half. Yeah. Chopped in half.
So the likelihood of us high-fiving tomorrow and us crying together, that likelihood is, not too dissimilar.
Yeah.
Therefore, is it a safe store of value? I would say so because I don't mind if my assets go downhill tomorrow and the next day and the next, as long as it bounces back up next year. So I have that kind of resilience and financial safety.
Right.
But if you have to make your assets make money for you, then of course it's not safe. Kind of like if you need a salary, then you should keep working a wage labor job.
Right.
But if you don't need a salary, then it's possibly the worst way to get paid in the world.
Yeah.
Yeah,
that's interesting. So Talk to me about you said that it may eventually become used as a way in which we can transact.
Yep.
I mean, how far away are we from that?
Not far.
Yeah.
And from a global perspective, we're already there. So there's economies that are not America. For example, my friends in Venezuela, who are using crypto for daily transactions already.
Yeah.
They use crypto to circumvent banking systems or legal systems that are not yet structured and potentially corrupt. They also use it to mitigate the effects of needing cash on hand to do transactions. My buddy was saying that his family member bought a Tesla with all cash in Venezuela because you can't finance it. You can't use digital transactions the same way. So the guy had to pull together cash. Also, when there's hyperinflation, you might need to off-ramp your fiat assets and convert them to something else. And something else usually comes in the form of just material goods or other things, other securities. But crypto is relatively easy to keep and to move. So when it comes to store of value, to be honest, Bitcoin and these other volatile assets may not be the best way. There are stablecoins, for example, which are USDC, USDT, etc. And those might be better, just to hold on to. And depending on what platforms you use to store crypto, for example, Coinbase, you can earn APY. So I'm not talking about DeFi yield API. APY of 2-3 years ago, where platforms are promising thousands of percent, hundreds of thousands of percent.
That was like
return.
Celsius, right? I know that didn't go so well.
There was others too. There was Badger, OtterClam.
Yeah.
There was
OtterClam. Who's coming up with these names?
Hey, dude, man. Badger DAO. What else? Man, I was in all of these things. I totally forgot.
These scientists in San Francisco are a little
no, or maybe teenagers.
Oh, teenagers in
Who knows?
Teenagers in San Francisco. Say no more.
I mean, just because there's a way to do this podcast where I give you sort of, let's say, truthful and mediated answers I would give on the news. And there's another way where I would answer your questions like we're bros, which I think, you were introduced by a good friend of mine.
Yeah.
Option number 2 is the better way. Exactly.
We're growing out already.
So, I'll kind of be more frank from now on.
Sure. I would love that. Don't they see me as like a news reporter?
Yeah. So, but yeah, I mean, anyway, I'm open for all your questions.
Okay, great. So,
and henceforth, we'll answer in a way that your audience will be like, oh, this guy speaks the way I would speak at a bar.
Yeah, no, that's good. So, talk to me about the fundamentals of Bitcoin. And I think that, I've read the original Bitcoin white paper. Mm-hmm. This is, what's his name? Satoshi or
Nakamoto, Satoshi.
Yeah. He wrote this, right? And so there's a limited supply of Bitcoin. Mm-hmm. Most people don't understand that. So you have a finite supply of Bitcoin being valued against a fiat dollar that is increasing in supply rapidly, really rapidly in the last 5 years, even more so. And obviously we're experiencing this inflation in the United States as a result. Talk to me about just the fundamental dynamics that kind of make it that it naturally should go up in value based on limited supply, the halving, all that stuff. I mean, a lot of people just don't even understand this stuff.
I see. So Bitcoin is on a timeline to expire.
Yeah.
That's how I'd put it. It's not like Bitcoin's going away, but there is a finite amount, and at some point there will be no more.
So when you say expire, you mean the supply is going
totally.
to...
There's no central bank printing more money.
Right.
Think of it that way.
Yeah.
There's no monetary system that's like, hey, let's inject the economy with more tokens.
Yeah.
That's not possible.
It's impossible, right.
So
the code is inherently such that eventually you will not be able to buy any more new Bitcoin.
Right, exactly. Yeah. So therefore, the scarcity will probably lead to
higher price.
Maybe.
Yeah. Officially or unofficially.
Yeah. I don't know.
We're back at the bar, bro.
Because, one way scarcity happens is that people hold Bitcoin, buy Bitcoin, it becomes more proliferated, we transact with it, and therefore it's harder to get our hands on Bitcoin, but we still want it.
Right.
And it keeps rising in value, so you want to invest with it.
Right.
So that's one way.
So
the worst way, though, the worst way is governments who are mining Bitcoin, by the way, including the Chinese. They just keep holding and holding. Whales hold Bitcoin.
Right. So talk to me about that. How are governments affecting the supply and the dynamics?
Well, right now you can look it up. Which governments are holding Bitcoin, transacting in Bitcoin? Some governments in the U.S. are accepting taxes in Bitcoin, for example. North Korea does money laundering with Bitcoin.
Yeah.
So
It's a popular pastime.
so you know, Bitcoin is prolific. You know,
Yeah.
it's in traditional finance. It's in the underworld. It's in liberal democratic governments.
Yeah.
You know, that we know and love. It's also in the worst communist dictatorships. Bitcoin is everywhere.
Yeah. So you're saying everyone loves it?
I'm saying if it gets locked up in certain pools of power and wealth, right? If the governments and the whales hold too much of it,
Yeah.
then in effect, it could lead to a situation where there are players with outsized power in the token economy, and the scarcity is more artificial than mainstream adoption. It's not like everybody wants it and has it and uses it.
Yeah.
It's more like Bitcoin's scarce because the whales want to trade once or twice per year, moving big amounts.
Yeah.
And the governments want to mine Bitcoin, hold it, and continue to just stay right there in their positions.
So how much Bitcoin? So okay, so if I'm someone listening to this, I don't understand what mining is, right? I guarantee like a lot of people.
Yeah. We should probably do a small lesson.
No, I'm trying to like distill this to the point where like someone who's never even heard of Bitcoin can understand this, because I know you operate at such a high level on this. I'm gonna bring you down off the mountain. In terms of like how much has been mined of Bitcoin already? Is it like 95, 96%? Or
I don't know the exact number.
Yeah.
We can check anytime though. With all these token economies, what's cool is that it's like the Internet Explorer. There's something called block explorers. So you can just go into a block explorer or just see the public blockchain ledger and see exactly where the tokens are, how much is out, that kind of thing. So that's one of the reasons why Bitcoin is strong, even if it has a large privacy component, because you can check transparently the public network and know what's going on.
So let me ask you this. Every now and then I have friends who are new to Bitcoin, and they're always like kind of testing it. They're like, well, what if the government bans it? What if they issue legislation to get rid of it? Or a recent one I've heard recently is, what about quantum computing? Would it be able to crack the blockchain code and then just dissolve it? Are these inherent risks to Bitcoin?
Oh man, quantum computing, yes, it's been a known issue for a while now that quantum computing, when it gets strong enough, would be a threat to the security and privacy of blockchain protocols.
But would it also be a threat to just any bank for that matter?
Perhaps, but we always talk about tech that way. I'm sure it'll be fine.
Yeah.
But that's quantum. Okay, so if I was to roll it back and just teach at a basic level a little bit about Bitcoin, what I'd say is Bitcoin is Web3. Most people don't understand what Web 1 and Web 2 are. So Web 1 is kind of like username, password. That's how we started in the internet. But Web 2 is like sign in with Gmail, sign in with Facebook. So you're integrated now, and your identity can be the same in multiple places. However, in Web 3, it's Connect Wallet. Connect Wallet is special because it associates your digital identity with your purchasing power, and it gives you sovereignty as well as privacy in your online activities. Not only that, you can use smart contracts to transact with people and make agreements without knowing their names or faces. So that's why we say blockchain is decentralized, because you don't need central authorities like middlemen, like transaction providers, legal teams to do things together. And also we believe Bitcoin as well as Web3 will bring a society where we can collaborate better, more seamlessly. But that being said, why is Bitcoin important? It's because initially people need faith in a system to jump in. And it turns out there's nothing better. I don't think there's nothing better than having people transact in your currency, your coin, or pay taxes in your network to get them into your marketplace and effectively start a society together. That's how over time, over history, many kings ended up creating empires, because they would create marketplaces like the Silk Road and force upon that marketplace their own currency, and also make people transact in that currency, hold that currency, and very importantly, pay taxes in that currency. So when you have that kind of system, then suddenly that society can grow and grow and grow. So right now, what we have is a system where if you open your wallet, then you're probably going to see cash. So cash money from governments, credit cards from companies, right? So companies and governments backing your entire purchasing power. But from now on, if you open your digital wallet, then suddenly you have currency, you have assets that nobody else controls, nor can they track really. So in that sense, you have more sovereignty.
Okay. Interesting. And do you think is that the government's interest in holding a lot of Bitcoin? Is that so they can ultimately control it as well?
Well, it depends which government. You know, because all the governments have different interests. You're talking about North Korea. I mean, they probably want to hold Bitcoin because it's easier than other currencies to move around and do bad things with.
Yeah.
Right. So it depends which government.
Yeah. Interesting. I mean, we hear this speculation a lot on TV or in different different avenues or mediums. I mean, Bitcoin's at what, around 118 right now, $118,000 per Bitcoin. I mean, let's just say in 2025, end of this year, and I know Q4 is kind of historically strong for Bitcoin. What do you think the price is going to be January 1 of 26?
Oh. I love these kinds of questions because nobody ever gets it right. But if you do, then you can look back later.
Yeah, well, trust me, I'll give you the short, the YouTube short.
Yeah. Like 12 months later, you'll be like, oh, Luke predicted the price of Bitcoin.
You're gonna become famous, man.
Yeah, just for the record, I'm pulling this out of thin air. You know, this is not scientific.
Yeah.
What would the price be like?
Yeah, what do you think?
Man, maybe down by 50% compared to now.
Really? You think it's going to drop?
Maybe up by 200%.
Okay.
Depends, you know?
We'll cut it either way based on how it goes.
Yeah. But it's a really, it depends situation.
Yeah. Because everyone I hear talks thinks it's going to be like 150 to 200.
Yeah, well, one thing I do know is every year people predict that Bitcoin will rise in price. And no matter the ups and downs, the high highs and low lows, it seems like every year my bullish friends are more correct. You know?
Yeah.
It's just been that way.
Yeah.
So for next year, do I think the trend of Bitcoin generally increasing will continue? Maybe, probably.
Yeah.
You know?
Yeah. Okay. I mean, like, let's say by 2032, I mean, where do you think it's going to be?
I mean, potentially Bitcoin people say it can go to $1 million per token, right?
Right.
Potentially that's true. Because in crypto asset markets, it's not uncommon to see tokens pump by 10x, for example, the original price within days.
Right.
At least if you look at meme coin markets. With altcoins, with other tokens that have been live, that are past the hype stage.
Yeah.
Who knows? Maybe not. But still, there's movements in, even in shitcoins.
Yeah.
You know, coins that everybody knows it's horrible.
Right.
So that being said, could Bitcoin see dramatic movement? Sure. But who can predict it? I'm not sure.
Yeah.
Who can force it? Maybe some global whales or whale networks.
Yeah.
But Bitcoin, I mean, that'd be hard to do.
Yeah.
Yeah.
Just because it's decentralized.
Decentralized, yes. Yeah.
So that's really what makes it inherently unique, as opposed to like fiat currency.
Pretty much.
Yeah.
Yeah.
Yeah, says the founder of the Berkeley blockchain.
I mean, my perspective though, sometimes people think I don't have opinions or my opinions are too mediated, but it's because I've been on both sides.
Yeah.
I've had experiences making good money investing in crypto through many different ways, launching tokens.
Yeah, when did you first get into crypto?
Like 10 years ago, over 10 years ago. So angel investing, you name it, staking, yield farming, everything.
And you were out in the Bay Area, right?
Right,
yeah,
exactly.
So like that.
And also in China and Korea and Japan,
Yeah.
so places where crypto is strong.
Yeah,
But
so you've kind of seen it all at this point.
Kind of. And nobody's seen it all, but yeah, on that side, working in crypto, I made money, but also lost money.
Well, there were some big swings early on, right? Because like
100%.
Yeah.
And there were hacks, many hacks.
Yeah.
You know,
the
and
FTX situation was a big bummer for Bitcoin.
Totally.
We lost, the Kaseya Center down the street used to be the FTX Center.
Yeah.
They got rid of that because
100%.
Because of its fraud.
Yeah.
Do you see another FTX type situation happening in Bitcoin?
In Bitcoin, I'm not sure. And it's hard to say in Bitcoin because, again, the founder is a guy named Satoshi Nakamoto.
Right.
But we don't even know if it's a guy.
Right.
And so who knows what the Bitcoin...
What's his deal? Like, so I've heard theories before. I've heard theories before that he's a CIA guy.
Yeah.
Like,
I've heard many theories too.
I've heard this theory where Bitcoin originally was like a scam set up by the CIA to steal people's money. Which, frankly, that wouldn't surprise me. So I'm wondering, like, do you think there's any credibility to that? Or did it just run away from them? Or, like, what happened?
I'll give you the honest answer. Just as an industry incumbent, I still have no idea who Satoshi Nakamoto is.
Right. I don't think anyone really understands.
I think it's one of the mysteries that is truly unique and appreciable in the world of technology.
Yeah. Do you think that's like a pen name?
Probably, yeah.
Yeah.
But what's really special is that Bitcoin ended up being a world-changing technology.
Yeah.
Very few pieces of tech do that. And what's interesting is it's emerging market plus frontier tech. It's quite hard to make that stuff sexy.
Yeah.
And this anonymous person using a white paper of all things made that happen. You know?
Yeah, most white papers don't really get read.
No way. There's no viral video.
And this dude's like
Yeah.
white paper went like everywhere.
There's no music festival, no Lambo, no hot girl repping the brand. I mean, can you imagine anonymous Satoshi?
Yeah, and he and his white paper like
Crazy.
just went out there and did it.
Yeah, I remember 10 years ago, I was really broke.
Yeah.
Living next to a dumpster with 3 other guys. We were all entrepreneurs. And this was in Berkeley.
This is like a rite of passage for
100%. I mean, like we were on a ramen budget, and one of the boys, he was on a timeline to do well in crypto because if not, he would have to go back to Korea to serve in the military. So it was like a life or death kind of game.
Wow, yeah.
And I remember from zero to hero, it took a couple of years, but the guy made it. Let's just say that. And it all started with us just huddling around a little couch, you know, in a dimly lit room, just being like, hey, what the hell is this white paper?
Yeah.
And how do we get into this economy?
Yeah.
But I would say that when people read that white paper, which I recommend everybody do,
Yeah.
it's like some people look at it and then just kind of get turned off. Others look at it and get turned on.
It's pretty dense.
It is dense.
Yeah, it's
but
dense.
you can read the first paragraph and be done.
Yeah.
Like I don't believe you ought to read the whole thing. The first paragraph is it's the banger.
Yeah.
Yeah.
It's the banger.
It is.
It's the Bitcoin banger.
Yeah.
No, I got through like the first page and I remember thinking, I was like, this is dense.
Yeah.
But no,
all you need, first page.
Yeah.
You know, due to the digital commerce, blah blah blah. That's the part.
Do you see you know, like the US digital coin? There's been talk about the US banks creating a digital asset or coin for just and replacing the physical dollar. There's been a lot of criticism about that. I think what most people are afraid of is that if a government decides, you know, if you don't pay your taxes or if you don't pay your parking, you know, bills or tickets or whatever, they're gonna like shut down your money and like, you know, strap you into a mile radius of where you live and like where you can't spend your money. Or like if COVID happens again and they say, hey, we don't want you to go anywhere, like, and they lock down your money. Like, do you see any threat of that happening? I mean, I know Trump has said like, hey, we're never gonna do this, you know, digital coin thing. But there was a lot of talk about it before he got in.
So I do see a danger of that kind of thing. Do you want to talk about the pros or the cons?
Let's
first?
talk about both.
Okay, but what do we start with?
Start with the pros.
With the pros? Okay. Well, the pros of using digital currency in government systems is that we would be able to more easily and reliably, as well as transparently, pay and also allocate public funds through taxation and other means. Meaning with crypto assets, it would be very easy for me to not use these paper forms and human accountants and all of that. With crypto assets, I could just see my literal Bitcoin or Ethereum or whatever, go to the government, see which treasury it sits inside of, and then see how that treasury spends my money on maybe a school over there or a bridge over here. So in that sense, you tie the end outcome of the dollar to that dollar instead of just some abstract budget. That's part of the reason why if you run taxation or liquid democracy, liquid taxation, using Bitcoin and other crypto assets, it could give people a sense of control and power and encourage paying their taxes just because you can see where your money's going and it's more transparent. Now, having said that, are there other benefits? Sure, but let's talk about cons. The con would be that the digital currencies of the world includes government-backed digital currencies. So we call them central bank digital currencies. And these central banks would be able to screw around with these economies the same way they might with fiat currencies.
Right.
And so you have on the digital front and the physical front, government-mandated monetary systems that are doing poorly. But also, as you said, with digital currencies, you can track very easily.
Yeah.
So maybe the government would be more like China. They would put social credit scores on your wallet to see your wallet behavior.
Yeah, that would suck.
Right, and they'll be like, man, this guy buys too many video games. He's a drain on society.
Yeah.
You know, shut down his video game power.
Yeah.
And, you know, cut his PlayStation subscription.
Yeah.
And hey,
that's not cool.
Yeah, like this guy, he's not paying his college loans, you know, on time.
Yeah.
And maybe he works at an orphanage. He's not making very much, so there's a reason. But the government could be like requisition all of his pay. You know, let's take away his apartment as well.
Yeah.
So I see where you're going with that.
Yeah.
It really depends.
I am a big believer that, you know, if whatever is the base, most stupid and corrupt way things can go for a government, that's typically the way it'll go. Just based on history.
Very American idea. I share that with you, by the way.
Yeah.
I think America is the country that does not like pomp and circumstance.
Yeah.
It does not want to dress its military in purple and gold.
Right.
It does not want its sages and spiritual class leading things in big speeches in government.
Well, it just kind of just fundamentally comes back to the history of the country. I mean,
low trust in government.
Yeah. I mean,
and if you come for me, I'll bring out my gun.
Yeah,
that kind of attitude.
No, totally,
attitude.
Totally. And it's interesting because I mean, you know, we were talking about this earlier. I was born in London.
Yeah.
Nobody ever guesses that based on this very American accent. But I lost it at an early age because I moved to the States at an early age. And it's funny because most of my brother, my dad, all my cousins are all English, and just the way they see the world, like they just don't have the American mindset at all. I mean, they see government as like a trustworthy entity, and this is something we should continue to expand and build, and it, you know, it does good things for us, and you know, it's just a very different mindset. So that's interesting. That's interesting. So okay, I want to get back a little to crypto culture in Miami. We touched on that a little, but like you said, it's a good place to invest. It's a good tax haven. Just from a cultural standpoint, I mean, like what, like do the crypto bros hang out around here? Like what are they doing? I know the Bitcoin conference used to be here, right? They've since moved it to Vegas. Like I'm sure you've been to a few Bitcoin conferences. I mean, what's that all about?
The Miami crypto crowd hangs out at some specific events, yes, at meetups, at conferences. I would say, to be honest, there's a lot more stupid money here than strategic money.
Okay.
So if you're trying to raise for a project, then Miami is not a bad place because you're going to find
interesting point.
You're going to find a lot of people nicely dressed.
Yeah.
You know, hanging out over here, trying to talk big at cocktail parties.
Yeah.
And trying to ride the wave, you know?
Yeah.
And if you have some level of legitimacy in your resume and you know something about the tech, it's probably pretty easy to raise stupid money here.
Yeah.
As opposed to,
do you think it's different? I mean, in my opinion, I think like the Bay Area in California is fantastically easy to raise money. I've personally fundraised out there, and I was like, wow, like you sit down for like an hour pitch meeting, and they're like, okay, well, how much you need?
yeah. The speed is aggressive.
Yeah,
and that can sometimes be misread as easy, but I don't think it's easy in San Francisco.
Yeah,
because people have such a high level of expertise.
Yes,
it's really
they hear pitches all the time.
Totally.
Yeah,
but in San Francisco, it's quite a bit about what you know, not who you know.
Yeah.
And you got to pitch well. But if you do, as you say, within 30 minutes, you can get $250,000.
Yeah. No, totally.
Yeah, because nobody wants to waste time.
Yeah.
Yeah. So
exactly.
But in Miami, I don't think you have to have as high quality of a pitch. But that being said, you know, in Miami,
you probably have to like sex it up a little, I would imagine.
Kind of, yeah.
Yeah, you're like, hey, we're doing this blockchain thing. We're gonna throw some parties. There's gonna be some hot girls there. You know, come join for the ride.
yeah. Miami crypto culture, man.
Yeah, that's interesting. So, do you find that there's like a core of Bitcoin kind of, I guess, intellectuals or OGs like yourself, who I would say really have had, you know, you've been involved in this over 10 years. So I would think there's like kind of the OGs that are here and like really have legit bona fides in the crypto industry. And then there's like the bandwagon, you know, the fans who are just kind of hanging out with you. Maybe they have money. They want to invest, but they just kind of want to just hang on to your coattails. Do you see that a lot?
It's not the same as in media, for example. But yeah, the effect you describe, it kind of happens.
Yeah.
That's partly why I hide the fact that I'm in crypto. And my ideal situation is for anybody, especially women, to underestimate me.
Yeah.
You know, I would suggest if you're in this world.
It's very easy to get underestimated by a woman.
If you're in this world, please, like, don't wear the watch, don't get the car.
Whether you're in Bitcoin or not.
And don't talk about your crypto because this is real talk.
Yeah.
You'll get robbed.
Oh, no, totally.
You know, I have multiple friends who were kidnapped and or mugged and or just robbed, which is a lucky case, right? If you're just robbed. Yeah. But I've had multiple friends who flex too hard, make the wrong friends, and they actually get targeted by various mafias. Yeah. And close friends too. Yeah. So I'm just lucky enough never to have had that happen to me. Yeah. But I've been close, let's just say.
Yeah. That's interesting.
So I hide everything, you know?
Yeah, no, totally. Well, it's not going to be hidden now.
No, even now, all you know is that I'm on a podcast. Like, hey, maybe I'm super poor. Yeah, maybe. Nobody knows. Right?
Let me ask you about this. So let me ask you about this, and this is kind of more of a technical thing with Bitcoin. Do you see platforms like Coinbase as actually being safe places to store crypto? Obviously, there's things like Trezor that have come out that's like a cold wallet. Most people who are starting to invest in Bitcoin, in my opinion, I think the storage is half the equation. It's a really important component. Do you think that Coinbase is a safe place to hold money? Or in my opinion, my personal opinion, I would say like if you have like 10 grand or less in Bitcoin, sure, Coinbase is fine. But like, I mean, if you've got like serious money on there, I'd probably move it to a cold wallet. Would you agree with that?
I would agree that a cold wallet is better than a hot wallet.
Yeah.
A non-custodial is better than a custodial.
Yeah.
But as the state of traditional finance gets better and better, and as the state of crypto finance matches the state of traditional finance with consumer protections, this argument might not stand next year or the year after. So
they're catching up.
Kind of, yeah.
Yeah, regulation and everything.
Yeah, and I mean, even smaller projects have some level of consumer guarantee these days. You have to. So, for example, there was a Airbnb clone in crypto, which would allow you to book travel using cryptocurrencies, and it would allow hosts to host properties. This platform, would guarantee each host up to $1 million of actually just reimbursement or assistance if ever customers ruined their place or some legal issue happened. So the network internally would say, oh, due to the fees we take and the treasury we build, we're going to guarantee you $1 million worth of protection, even if there's no FDIC or no insurance, that kind of thing.
Yeah.
So, but as long as you have that consumer protection within a network that you trust, I think you're good to go. The only thing about the traditional industry side is if you think that Coinbase might somehow be insolvent or nefarious or have some cause to hold your assets, whatever, then maybe you don't trust that centralized player because ultimately they're the ones who can close your wallet and not let you access it.
Right.
But also, if you're someone who cares a lot about privacy, then maybe that's another reason why you would be off of a Coinbase or some kind of centralized party. It'd be easy for you to hold your assets in a wallet that's completely anonymous. But it's just up to what you prefer.
This happened with Celsius, right? Like I never really understood what happened with that, but it seems like, I knew a handful of people who lost a good amount of money from that.
Yep.
And they were only able to recover, I think maybe like 20%, 25%.
Yeah. It's the same in neobanks as in crypto though. So for example, I have good friends who lost their entire savings due to Celsius going down.
Yeah.
That's a really well-known story, and it's a warning story of how a centralized player might not hold your currency properly, might not treat it the way you would treat it. But besides that, there's also FTX, which we mentioned earlier, and also there's neobanks, which may not even have anything to do with crypto, but perhaps it's a bank or a so-called bank that's actually a ledger rather than a custodian, a store of actual value.
Yeah.
So then when that comes out, people realize, oh my God, this neobank is now insolvent. Therefore, my savings are gone as well. So if you're going to play in the world of fintech, whether it's crypto assets or just a digitized form of traditional finance, you're always incurring some risk.
Well, I mean, I would say that even if you invested with Merrill Lynch. I mean, it's like people think that that's like just kind of an old standby investment, firm. But I've worked with them before, and I mean, they do dumb things too.
Yeah, 100%. Yeah. I mean, I don't know. There was a day that I found out my buddy at one of these big banks, I found out that he's a wealth manager, but what he really does is call his own customer support. And he asks questions that his client asks him to customer support, and then internal tells him what to say back to them. So, like, this guy's a guy I went to college with. Good guy. But he was just like, bro, I can't believe that my job is to relay information from my internal honchos to my clientele.
Yeah.
And I don't know how to invest their money, actually.
Yeah. Yeah. No, there's a lot of smoke and mirrors for sure. You have to do a lot of research. You really do. So You said you are one of a co-founder of the Berkeley Blockchain Accelerator.
Yes.
Not fun, excuse me.
All good.
Fun sounds cooler though.
Yeah, it does. I do work at a fund right now.
Yeah.
But.
Okay, can you explain to me what that means exactly? That sounds really impressive, but I have no idea what that means exactly.
Yeah. Let me give it some context. Yeah. So after Berkeley, I started a company. With that company, I ended up getting a client in Switzerland, one of the biggest wealth managers in the world.
Okay.
We had a plan to buy up distressed U.S. banks, put them under one roof, and then back into the stock market. Okay. So as to create a financial system where people can go into the U.S. banking system, but connect it to the Swiss banking system and wealth management by way of a stablecoin. So an early stablecoin, which would allow people to hold their assets inside of Switzerland. Now, the claim to fame, the mission here was to use that wealth management firm's connections and deal flow and investment vehicles to allow people in the world, the everyman, to invest with the confidence and quality level of aristocrats. So not a bad idea. Make everybody rich, you know?
Right.
Take part in great deals.
But like rich people don't like that.
I mean, it's not like there's it's not a zero-sum game, you know?
I don't know. Based on legislation, I would say they don't like the little guy.
Yeah.
Look at New York City.
I hear you.
New York City is not designed for entrepreneurs.
Yeah, I hear you. But after that experience, actually, I ended up moving into a CMO role at an early protocol. So we launched a decentralized exchange. We had a smart contract platform. You can launch your tokens on that platform.
Right.
We had decentralized applications, e-commerce using crypto, point of sale system, etc. And that's when UC Berkeley needed somebody to open up the Berkeley Blockchain Accelerator.
Okay.
So I got hired into the engineering school. And what we did is myself and one other person, we set up a system where we could attract the best researchers and entrepreneurs around the world. And then we would help them get follow-on funding, support them through their build, and things like that. But after that, I was able to CMO a couple of other blockchain companies, CEO one as well, and then work with the mayor of Syracuse to launch, or actually to pilot a civic token, let's say.
Yeah.
So that's where we thought about a central bank digital currency, smart contract microbonds instead of actual contract microbonds, smart contract. Etc.
Okay.
So
let's back this up a little because
Berkeley Blockchain Accelerator, if you look into the portfolio, you'll see that some of the startups went big and maybe I should have invested, but I didn't because of conflict of interest.
Okay.
So gotcha. I made no money off of the.
So when you're I can just like see my mom watching this and she's gonna be like, "What is he talking about?" So what exactly is the blockchain?
Wow. Such a dude.
I'm gonna like really like distill this.
This is a question I love to ask when some crypto chick shows up to a cafe in Miami Beach.
Yeah.
Sees that I work in the same space. She's like, "Oh, I made such and such amounts of money on Dogecoin or something."
Yeah.
Then I have to ask, "Hey, what's the blockchain?" Because it's possible to make tons of money in this space without knowing the tech at all.
Yeah, no, I know. I know.
It's crazy. It's almost like it's better if you don't know the tech.
Yeah.
You don't overthink.
Yeah, no, definitely. That's true of a lot of things in life.
Yeah. What's the blockchain?
Yeah, what is the blockchain?
There are multiple blockchains, and blockchain technologies are based on protocols. Protocols are the way that each blockchain network runs.
Okay.
Now, to each token economy, there's usually a blockchain protocol. So Bitcoin network has the Bitcoin token, Ethereum network has the Ethereum token, et cetera, et cetera.
Yeah.
And the tokens generally have to have utility. So have you heard about security versus utility?
I think that, so when you say utility, you're like, I've heard before that Ethereum has been used to like reconcile transactions like with Visa or credit cards. Like, is that what you mean by the utility?
Pretty much, yeah. So if a token, a crypto asset, and by the way, token and crypto is pretty much interchangeable.
Yeah.
But when a crypto asset has usefulness, then it has utility.
Yeah.
And that's one of the ways that you keep it from becoming a security. Which
and if it has utility, it inherently pumps the value of it.
Depends.
So, yeah, it depends. I mean, this is kind of, to me, this has been like the mystery of Ethereum, is that like I invested in Ethereum like 10 years ago. But it's like not really done much, But if I had put that money in Bitcoin, I would have been freaking rich by now. But
I see what you're saying.
Yeah, I mean, but like Ethereum,
relatively,
Ethereum's kind of like been like, it's kind of been like the redheaded stepchild of crypto. I mean,
these days it's also pumping these days.
Yeah, no, it's doing better, but not like Bitcoin did.
Yeah. Because that's what I'm saying is Bitcoin's so original.
Yeah, it's the OG. It's Big Brother.
Yeah, it's undeniable.
Yeah. So there's just inherently a lot more confidence in Bitcoin.
I would say so.
Yeah.
Yeah. Plus, it's the household name. Like I have a marketer background. I love industry standards and household names. Those two things usually win in society.
Yeah.
And so if I ask anybody like your mom or my mom about crypto, they're going to immediately say Bitcoin.
Right.
So it's kind of like when I ask for a tissue, I might ask for a Kleenex.
Right.
You know, Kleenex and tissues, same thing.
Yeah.
But Kleenex is a brand.
Right.
That's how I know Kleenex
You wouldn't
is here
call
to
it a
stay.
brawny. Yeah.
Yeah. Wow.
Yeah.
You know, I mean, how did Kleenex become the word for tissue?
Right.
Bitcoin is the word for crypto right now.
Right.
You know,
So therefore, you're saying
it's resilient.
It's probably not going to go to zero.
Does my mom know Ethereum? No, she does not know Ethereum.
Right.
Does your mom know Ethereum?
No.
What about Solana?
100%. No.
Yeah, Avalanche?
No.
Polkadot?
Yeah.
Going through the networks?
Yeah.
You
No,
know?
not at all.
Yeah, Pocket? No?
Yeah.
Yeah. So the moms know Bitcoin.
But moms definitely know Bitcoin.
So-
But in my family, they're like, that's stupid. We're not, My mom's like, she loves silver.
But still?
Yeah.
I mean, even after all this time and all the...
They're still afraid of it. Still afraid of it.
okay.
My mom has an emotional attachment to silver. That's like her thing. She loves silver.
Yeah, I love
not
silver
gold.
too.
Yeah, not gold.
Yeah.
Silver.
I like silver. I think, a lot of people know that silver is a good thing to have.
Yeah, I mean, it's doing pretty well. It's at an all-time high right now, but it's like, it's not like Bitcoin, but okay. So, is there any? So, in terms of what you're doing now in Miami in the crypto space, I mean, what are you up to right now?
So right now, I have an agency called Truth Cartel. And
Truth Cartel, I like that name.
Yeah, it's a cartel of truth. And our purpose for the past 10 years or so has been to do marketing for Web3 clientele. That's why we've worked with pretty much any tech you can think of in blockchain. We've also worked with any crypto asset you can think of in token economies. So that goes from conceptualization and strategy all the way to launch and structuring. The thing is, I love being on this side because you can really help great entrepreneurs to realize their visions and bring to people something that could change their lives.
Yeah.
Ultimately, I've seen people change their lives in bad ways in crypto, but I've also seen people really feed 3 generations of family.
Yeah.
So not bad.
Yeah.
That aside, I still have an involvement with UC Berkeley, where I teach different things now as part of the faculty. But whenever they have blockchain needs, I jump in and help out.
Yeah. What do you teach at Berkeley?
Solopreneurship. So it's how individuals can turn their own expertise into businesses without seeking venture investment, getting teammates, getting a co-founder, or even hiring. It's a way to do things with zero budget and zero time, with mostly automation. Yeah.
Okay. Cool. How do you see AI playing into the crypto world, changing things in the future?
Agentic AI will probably have a big role to play in crypto. For example, in DAOs, which are decentralized autonomous organizations. These are organizations that are run nearly entirely through smart contracts. And oftentimes, members of a DAO will vote on governance to determine the monetary policies of a token economy or the tech roadmap of a blockchain protocol. So in DAOs, there's kind of a need to have autonomous actions being taken and autonomous approvals. Agentic AI can probably help out with that. Multimodal AI will probably help out with cross-chain and omni-chain activities. So there used to be a time when cross-chain used to be the hot buzzword because you want to be able to transfer value and also actions from one network to another. So in that sense, I think cross-chain will be a big thing. But I mean, the world's like, I hesitate to be exhaustive about my list because like the world's your oyster, you know?
Yeah.
Somebody thinks up a new technology at a hackathon that I never thought about.
It's an otter clan.
Yeah, every time I go, go to a conference or a Badger, which by the way, Badger was called Badger DAO.
Badger DAO.
So anyway, Agentic for
teenagers
DAOs,
in San Francisco are silly.
Multimodal for cross-chain.
I grew up in like that area, so I know exactly who you're talking about.
Yeah.
Like I remember back. I mean, this is gonna date me a little, but I used to hang out with these guys, and we'd be like typing MS DOS back in the day. Downloading videos from China, which I thought I was really cool back then because I was like, man,
I'm torrenting as well.
I was like, dude, I'm like a hacker.
Yeah, 100%. And by the way, you were in the early stages of Web3 then.
Yeah, no,
Yeah.
I mean, we were, I mean, and I couldn't do that to save my life now. But I know exactly the type of guy you're talking about.
Yeah.
So I guess what we'll do is we'll include all your information down below in the description of this video. Thank you so much for dropping by. This was a super interesting conversation, very high level in terms of what we're discussing. I hope everyone was able to keep up. But this has been super fascinating. And I guess overall, I mean, are there any final things you would say about Bitcoin and whether or not you should invest in it?
Yeah, Bitcoin is really hype. If you want to invest in something, it's not a bad place to look. But think about other options as well. And if you're looking at crypto in general, just try and research how many developers are in this community. Is there actually adoption? Go into their Discord, their Telegram, etc., and see the chatter. Is it mostly about stupid token talk, or is it about actual substance? Right? So see the developer community, the adoption of tech, and that should tell you the base health of the network, protocol level. And then check out what kinds of apps are being built on this protocol. See if the apps are useful, right? If the apps have adoption themselves, what the user rate is. So then you see, oh, is a protocol adopted? Then check out the smart contract function of a crypto asset and how it drives utility in the network. Because then you'll know, does this crypto have a reason to exist? This is the place where usually it's a no.
Yeah.
But the crypto doesn't have a reason to exist, right? Ethereum powered smart contracts. It was a way to pay fees to do contracts and transactions. So, okay, let's say there's a reason. Then you look at the graph. Only then do you look at the graph and check out, okay, is the token performing at a level where it's reasonable? Have there been any huge high highs or low lows that signal either market manipulation or a lack of value somehow, or even corruption? And then finally, diligence that project the way you would as a VC. Look into the team, check out the teammates, and see, is the CEO anonymous for no good reason? That's very common. Right? Do they have a structure of execution, or is this some kind of decentralized, which it's not true decentralization. It's more like we don't know what we're doing and we have no structure. Right? And
there's a lot of entrepreneurs like that.
100%. And then you put your smart money, not your stupid money, into this economy, and then you watch, right? Because crypto is so volatile. So when you go into the markets, I would advise that you go in at a time when your week is not full of work and play, right?
Yeah.
Because you want to be able to look at this stuff. And I would say get in and out, rather than trying to play medium-term games or hold long-term. Because when you're trying to be a medium-term trader, then it's going to affect your life in many ways. I mean, you wake up and watch the graph.
I think that's a great.
Like, dude, you're at dinner with somebody and you're thinking about your tokens.
Yeah.
And every downwards movement will ruin your day.
Well, that's the thing about investing is, and I there was a period of time I got into day trading, and I will tell you that, I mean, I emotionally could not handle it. It's just, it's too much.
Yeah,
like,
me too.
It's like, it just consumes your life. I mean, you'll be on your laptop 24/7. I mean, like, yeah. So like, I think that's a good way to look at it is just, the way I see Bitcoin, I just see it as a long-term hold. I'm not trying to time it. I always think it's a good time to buy. There's just, you don't need to time. I mean, if you know some basic things about Fibonacci sequences and whatnot, sure. Like, you can see the bottom of where, the chart is from technical analysis. But I mean, beyond that, it's a long-term hold. And I think that's just better for everyone emotionally as well.
Yeah, 100%. I mean, imagine if you had to pay your taxes in rice. You're a Japanese farmer, and every day you could see your rice growing and falling.
Yeah.
I mean, can you imagine the emotional state of that farmer?
No, totally. Yeah, I mean, someone texted me today, like, when should I buy Tesla? I'm like, just buy it and hold it. Like, like, hold it for 10 years. Like,
But one really big thing I want to tell everyone is there is no FOMO here. Like, no FOMO. There's always a next best investment. There's always a hype cycle every generation.
Yeah.
Just because you don't get into crypto or get into this hype cycle does not mean you lost something.
Yeah.
No regrets.
And I would say Bitcoin's doing well, but we're still on the early side of it, I would say.
Yeah, totally.
For sure. I mean, you can there's still a chance to get in with a coin or two, over a course of 2 or 3 years.
Yep.
Whereas I in my opinion, 20 years from now, that's going to be gone. Yeah.
Exactly.
So, So anyway,
you know, I wish I could have given more definitive advice. Like if I was an alchemist or a magician.
Listen, your breakdown just now of how to figure out if a coin's good or not, that was phenomenal.
Yeah, you got.
I don't think I've ever heard that from anyone. So I think you're in like the top like 0.0001 percentile of how to figure out if a coin is worth a shit or not.
Yeah. That's the question. Is it worth or shit?
Yeah, exactly.
That's the question, dude. Yeah.
No,
this is very
definitely.
like 0 or 1, black or white.
No, totally.
You know, it's not a false dichotomy. It's a dichotomy.
Yeah, totally.
Yeah.
Cool. All right, man. Well, thank you so much for
you.
your time. Great to have you here. This was super informational. And we'll drop all your info in the description. And thanks for dropping by.
Thank you, everybody.